Hello, good afternoon. You're tuned into Closing Trades on ET Now. I'm Anisha Jain, with me Saisha Faridi, and the market continues to consolidate a bit. We're just around that flat line, managed to hold on to that 18,300 mark. But it is the day of the weekly options expiry, so there is expected to be a bit of an impact on that as well. Nifty Bank is the one which is outperforming today, a solid gain of almost 0.5%, 220 points higher. It's largely been led by the private banking names today, so it's the likes of AU Small Finance Bank, IndusInd Bank, Bandhan Bank which are rising. But then there is a bit of bounce back when it comes to the PSU banking names as well. So we're watching out for that. Having said that, Pharma is the space which is lagging. A big drop as far as some of these Pharma names is concerned. Of course, Dr. Reddy's is reacting to the earnings that we have seen. But other than that, you also have names like Aurobindo Pharma, Laurus Labs, and these charts should come up for you on the screen. These are the counters which are actually dragging the index lower. Let's pull up the intraday chart of Dr. Reddy's, Laurus Labs, Aurobindo Pharma, and they will tell you the kind of reactions that we are seeing on the pharma space. Having said that, it's not down and out. There is auto space which is actually doing well, so that's indexed at all-time high levels, and FMCG too is at all-time high levels. So we are watching out for these, and of course, Aisha, a lot of result reactions to track today, right?
Yeah, absolutely. You were just highlighting DRL, L&T as well is the one that has been seeing an earnings reaction from the word go today. So look what's happening on L&T, for instance. That's one of the top drags on the index, as is Dr. Reddy's. Even Novelis's inline performance hasn't rubbed off on Hindalco. That continues to lose sheen. That stock as well is also down in the red. Having said that, some smaller ones which have turned out to be a bit of a beat. So Gujarat Gas was expecting that. Ratnamani Metals, Kirloskar Brothers, these have all been some strong earnings reaction that we're seeing. Gujarat Gas now holding up 5.5% and 20% circuit now for Kirloskar as well. Paytm, SoftBank has sold over 2% stake in Paytm. The notification came by today. Paytm is down about roughly 3% as we speak right now. And Mankind Pharma, the new listing, while it was all in good news for the last two trading sessions up until its listing. Today, of course, that's one stock which has been languishing. IT searches are now going on at their office premises in NCR. That is what sources seem to be indicating. And that stock has taken a bit of a knock. Having said that, I must admit, if you bring up the intraday graph of Mankind, it was down about 4% when this news came. And that dip in Mankind has actually got bought into, and you've seen a bit of a recovery play out for the stock, now down 1% for a one which had a bumper listing and a very smart follow through day two as well. But let's take it across to Kunal and Naresh, find out what they're making of the market temperament. Kunal, hi afternoon, holding pretty quiet for the index, but I guess no complaint, 18,350 on the futures.
Yeah, nothing much to complain. Today being the weekly expiry, we track the options data specifically for the index, and at the 18,300 strike, as we indicated even yesterday on closing, that there's a heavy amount of call writing. So almost 3 lakh plus, was the open interest yesterday on closing basis, which means there were a huge amount of option writers who were writing their 18,300 calls and staying put, expecting the markets would not rally up significantly. Even throughout the day, the Nifty spot has been unable to surpass even the 18,350 mark. So that itself tells you that the action is very limited and specific towards the weekly expiry. I wouldn't be surprised that by the end of the day today, we close just below that or at the 18,300 mark. So this could probably give a relief to the option writers. But then tomorrow I think would be an interesting day because we've seen historically that after such kind of a day when the option writers manage to protect as well as shield a particular strike for themselves, next day generally is a breakout for the indices. So hoping for that on the index and would maintain the bullish stance. 18,300 could be a good intraday support for the index over the near term.
The large cap pharma names are actually down and out. So the likes of Aurobindo Pharma, Dr. Reddy's, Laurus Labs are the ones that we talked about are down. But look at the Sanofi India, for instance. That stock is gaining 8%. Of course, the demerger news was announced yesterday. But nonetheless, that stock is reacting today. And then pull up a Newland Labs. Just the numbers hitting the screen, and that stock is reacting with a gap up of around 20%. The margin profile has improved considerably. There's a big bump up when it comes to the top line as well. And as a result of that, we are seeing the positive reaction come for Newland Labs. Look at the surge, 19% higher. Before I come to you, Naresh, let me take it across to Pankaj Murarka, who's joining us now to talk to us about the pharma sector. Pankaj, your reading of the earnings so far of the pharma sector, and what's the best stock to play at this point of time in pharma?
No, hi, good afternoon. I think we are yet to see numbers from some of the other companies like Sun Pharma, but so far what we have seen in terms of numbers, they are pretty healthy in that sense. One trend that's clearly coming out is we are seeing troughing out of pricing pressure in the US market. US market is the largest market for all global pharma companies and especially for Indian pharma companies. And last 2 years, 2.5 years, there have been a significant pricing pressure in the US market, which have been impacting companies adversely. And as a result, sector as a whole has been having negative earnings growth actually for the last 2 years. I think now we've reached a stage where prices in US have started stabilizing. And that's becoming more and more evident from commentaries that companies are giving and what we are seeing, especially on a Q on Q basis or on a quarter on quarter basis, we are seeing stability in prices. More importantly, we think that probably we've reached a stage where earnings in the sector as a whole has struck out because the sector has been a big underperformer over the last 2 years. And from this year onwards, the new financial year onwards, the sector will start delivering healthy growth. So I think the sector overall looks pretty well poised in that sense. Within the sector, we've been traditional holders of Sun Pharma, so we continue to like that given the diversified nature of their business. But apart from that, we've also started turning positive on Lupin after their last results. And we always liked contract research as a space. So we like some of those companies like Syngene where we have ownership.
Right. Okay, let me quickly take it across to Naresh as well and get in some views from him too. Naresh, just wanted to understand what your take is on both L&T as well as DRL, given the sharp reaction that one is seeing on account of their earnings miss.
So L&T, the medium-term outlook and the short-term outlook still remains positive. This dip to 2200 to 2250 should be used as a buying opportunity. The longer-term trend remains clearly up. And what we are seeing out here is, look at the trend which has continued in ABB and Siemens. So out here, I would expect a recovery going forward into L&T and again go back to 2400, 2500 levels. So positive on L&T at current levels. Dr. Reddy's, again, a similar case to what has happened in a lot of pharma names. The moves have not been able to sustain. So it is back to that level of 4550 to 4650, which was the last breakout. So again, from here, I would expect a slow and steady bounce back. I would keep a stop loss below 4500 and look out for a long position.
That's the take coming in on some of these pharma names. But since we're talking about earnings, let's welcome on board Mr. Prasanna Pedgaonkar as well. He's a general manager at Venky's joining us. Prasanna, hi, good afternoon. Thank you so much for making time and speaking with us. Let's begin by talking about your operational performance because the margins have declined substantially, now down to 3.3% versus 7% earlier. Our maize prices still continue to be quite elevated, and what's the outlook on margins?
Good afternoon, ma'am. First of all, thanks for inviting this interview, because it's very important to clarify, because many of the times what it looks on the paper and what actually it's behind is completely a different scenario. So let me tell you, as far as last year is concerned, it was supposed to be the most peak years as far as ingredient prices are concerned, in particularly soya. So soya cost us as high as 100 rupees, which at present is working somewhere around 45 rupees, 50 rupees. Same is the case with the maize. Last year, maize price were somewhere around 26 rupees to 27 rupees, which at present is working at 20 rupees to 21 rupees. So as far as ingredient prices are concerned, compared to last year, with the start of this year, definitely this is a relief. We expect this year to be a bumper year as far as availability of crop is concerned in India, both for maize as well as soya. The worst part last year was we had to import 12 lakh metric tons of soya bean. As far as India is concerned, India never imported. India had been an exporter of soya. But for the financial year 23, it was the first year where India imported soya of 12 lakh metric tons. This year, fortunately, we have enough soft soya crop. So we expect that there should be a sigh of relief as far as ingredient availability and both prices are. So we hope this will be taken care as far as coming 23-24 years.
Net, you talked about the availability of how raw materials is likely to pan out. What would be the impact on your numbers with respect to the margins going forward?
If we analyze last year's performance, ma'am, we see that as far as poultry is concerned, we hardly had profit, which last year the profit was almost 56 crore, which has come down to hardly we have broke even as far as FY23 is concerned. That is purely because of the ingredient prices, because there was a pressure of ingredient prices. Most of the industry player has lost last year only because of the pressure of ingredient prices. Fortunately, Venky didn't have that kind of shock because we have a good portfolio balancing. So we have animal health, care division, we have soya division, as well as we have SPF division and a poultry division. So major dent was in poultry, because of which the profit earlier year was 56 crore, which has gone to hardly 5 lakh. We expect to regain, and we expect that whatever the sigh of relief we are getting as far as ingredient prices are concerned, that will take care of the profitability for current financial year and for years together coming together. Because ingredient prices is something which really we do not have any control. And fortunately, government is also working a lot for making the crops available. They are giving a lot of relief to agriculture sector. And we consider agriculture sector as a sister concern of ours. And as far as agriculture sector goes well, definitely poultry should do well for Venki's.
Right. Sure, point taken. But Mr. Petkankar, just wanted to get a sense of where things stand as of now. And on the basis of that, how much of a recovery are you, envisioning when it comes to your poultry segment?
With regard to the process, what Venki's has followed for last couple of years, after a lot of experiences, we have learned what not to do rather than doing what. So we are taking care of two major things. One, whatever the capex has been installed, utilization of that capex at the fullest extent. Secondly, we are virtually a debt-free because we do believe that debts dent. So as far as debts are concerned, we are virtually a debt-free company, and we believe in that. If we will not take much of the pressure of the debt, and whatever our internal accruals will be there and profit will be there, that will be taken care for expanding the capacity. As we have clearly mentioned in our comment, that we are coming up with one project of animal health product division in Satara, which is likely to complete the expansion, and the expanded capacity should be come into the picture from July, August onwards. So that July, August onwards, we expect the adding of almost 60 to 70 crore of the turnover, since this is the first year where the expansion will be slow. But over a period of time, that plant will add to the capacity also, and that plant will add to the profitability. And that's purely a drug making manufacturing unit, which will take care of good volume as well as good profitability.
Specifically, could you give any guidance and visibility on, in particular about the poultry segment, what you hope to clock in terms of margins and profits?
The way in which ingredients are supporting us and the way in which our top line is growing, we expect we should be in a position to match what our performance is earlier year when the agriculture sector has supported us. Because that is the only thing where we do not have a control. But the way in which things are working for India, for availability, we believe if maize prices continues to be around 20-21 rupees and soya price somewhere around 45 rupees to 50 rupees. So whatever the losses of profit we have reported in FY23 should be regained in FY24. That is our expectation. We hope that whatever our expectations are there, that should come through for financial year 24.
Mr. Prasanna, we let you go on that note. Thank you so much for joining us today. Just taking a look at some of the other stocks which are spiking. TND is up 11%. Chola Financials has seen an uptick of 7% suddenly. And then you also have names like Transport Corp, etc., which have been holding up in the green. On the losing side, let's take a look at Safari Industries. Not sure what went wrong with that counter, but that had suddenly nosedive. And of course, Aditya Birla Capital is a result reaction that we are seeing. So that's a downtick of 4% there. And talking about result reaction, let's pull up the Newland Lab stock again, because that continues to inch higher by as much as 20%. Let's get back to our discussion with Pankaj Murarka. Pankaj, wanted your take regarding the stock of L&T as well. Fundamentally speaking, everybody seems to be quite positive about the capex cycle, and L&T is supposed to be the best way to play it. But today there are no buyers for the counter.
Well, initially the stock had run up before the results, so it had a pretty decent or healthy run up in stock price over the last 4 or 5 weeks. And there was some bit of disappointment on their margins on the business last quarter. And I think that's more a short-term issue where they got impacted because of rising commodity costs. But probably we should see margins reverting back in this financial year or the next financial year. So in that sense, I think the medium-term outlook for L&T continues to remain strong. As you rightly said, given the uptick in investment cycle, L&T is a classic play on infrastructure investments across the whole segments, be it roads or airports or urban transport, mobility, and or oil and gas and hydrogen and so on and so forth. So I think overall medium-term outlook for L&T continues to remain strong. For investors having a view which is 1 year and plus, I think it still makes a reasonable investment case.
A reasonable investment case for L&T, but on that note, slipping into a very short break. Don't go anywhere. A lot of stock-specific discussion lined up on the other side.
Back with closing trades, right here in ET now, still pretty flat when it comes to the Nifty. Just want to check in on what the US futures as well are up to, considering the CPI inflation print, and it cooled off more than what the markets anticipated. So pretty much everyone now working with a pause for the next Fed action, and then maybe a rate cut as well come July. That's what the street seems to be anticipating. Having said that, just marginally in the green really. For US futures, it's actually Nasdaq which is taking the lead by about 0.3% gain. The one space, though, which is in focus, especially after, the commentary that we've seen from a couple of these, new age tech startups. So look at food delivery, for instance, and the kind of fall that some of these stocks have had. Zomato, of course, while it did have a strong listing, off late it's seen a fall of about almost 17%. You've seen Swiggy unlisted at that, but the valuation has seen a drop of about 49%. And if I'm not mistaken, Anisha, there was that note as well, right? Talking about a sizable cut in Swiggy valuation.
That's true. Invesco had cut down the valuations as far as Swiggy is concerned as well. So, Pankaj, your take as far as the valuations of our listed world is concerned, the new age tech companies?
Well, just to put things in context, when these companies got IPO'd, there was a lot of euphoria and frenzy around these companies. And I've said this earlier. I believe that these IPOs were mispriced in that sense, and which is why these stocks have had a significant downtick in prices post their listing on the bourses. But having said that, I think one thing which has clearly happened is these companies have made rapid pivots to the business models, because capital markets wants profit-making businesses who can deliver growth and, more importantly, give cash back to shareholders in terms of dividends or stock buyback. So these companies have made rapid pivots to their business models, where these companies, some of these companies have already started making generating cash flows, like Paytm, and there are some others which will start generating positive free cash flow in that sense. So I think valuations in that space as such have moderated significantly from where they were 18 months back, be it the listed space. And for that matter, I think similar markdowns have happened in the unlisted space as well. And now we find at least certain stocks or some stocks in the space are more reasonably priced, though we still think that there are certain stocks which are still expensive in that sense. And probably we're looking at more attractive prices or reasonable prices as better entry points in some of those names. But otherwise, I would think valuations have moderated significantly and have become attractive, at least for some names in the space.
Balrampur Chini numbers as well on your screens right now, and optically they look like good numbers, nothing short of what was expected. But since you are talking right now, Pankaj, that their valuations definitely have moderated, and that's for everyone to see, where is it that you've added positions or bought afresh into any of these names?
We think they've started generating free cash flow now. And we think they can have a very strong growth curve over the next 3 to 5 years, because now, if you look at the whole payment space, it's a clearly oligopoly between 3 players, which is Paytm, Google Pay, and PhonePe. And the fact is that digital payments are growing at 40-50% CAGR, and they will continue to grow given India's growth dynamics. And now Paytm has started making money out of their core business, which is payments business, apart from the other financial services business. So that's one we own. We also own, we have owned for a long time, and we've added to our positions in our core holding, which is InfoEdge, which is essentially the Naukri and the other verticals business, and also principal shareholder in Zomato and Policybazaar. So we think valuations there have moderated over the last 18 months in line with the space, and it looks pretty attractive to us in that sense. So we've added to our positions on InfoEdge as well.
At this point of time is Asian Paints. Look at the solid up move on that counter now, 3% gain coming in, and that's because the margin performance is much better than what Street expected, and the management commentary too about the outlook is quite strong. Let's go across to Amakshi to get the other internals. Hi, Amakshi.
Well, absolutely. When we look at the company's earnings, we did see that the revenue did come in line, but the company posted a very strong beat as far as the EBITDA, PAT, as well as the margins are concerned. Now, revenue came in at almost 8,787 crores, an uptick of almost 11% on a year-on-year basis. EBITDA also came in higher, much stronger at almost 30% on a year-on-year basis, but it is the net profit number that also stood out for us. 45% uptick coming in as far as the net profit is concerned. They reported a net profit of almost 1,259 crores. The EBITDA margins have also improved very sharply. 14% is where they were at we've seen actually an improvement almost 14% as far as the margins are concerned on a quarter-on-quarter basis. And when we look at the highlights that have come in from the business, the decorative as well as the non-automotive industrial businesses have registered a very strong double-digit volume as well as value growth. Margin has definitely improved sequentially, and that is on the back of easing inflation in raw material prices as well as sourcing efficiencies. As far as the home decor space is concerned, new categories of fabrics, decorative lighting, UPVC doors, windows did well, while the kitchen and bath segments were quite sluggish. Now, that was it for the domestic businesses, but what about the global businesses? Well, they were also good in the Middle East as well as Africa, but they were rather slower in Asia. Sales have decreased by nearly 2.7% in the fourth quarter of FY23 to 794 crores on the back of economic uncertainty, forex crisis as well as the liquidity issues in key markets of Asia as well as Africa. Now, when we look at the management commentary, the management stated that it will continue to aggressively pursue growth. They also committed to scaling home decor revenues to nearly 8 to 10% of the decorative revenue by FY26. So largely what we're seeing is that the revenue has definitely come in line, but the company has posted a very strong beat as far as the PAT as well as the margin is concerned.
For that, Pankaj, quickly coming to you on Asian Paints, there was this worry about new entrants in the market, whether it was Grasim, JSW or even JK Group for that matter. Do you think Asian Paints will continue to maintain the lead when it comes to the paint segment?
Well, undoubtedly, they'll continue to remain a leader, but a leader can still lose some market share. Having said that, it's a very well entrenched player, and it's a phenomenal company with very strong brand distribution. And I think they'll continue to dominate the space. There's no denying the fact. Having said that, as more players enter the market, I think they can help expand the market or grow the market faster, because penetration is there is still quite a room for penetration in tier 3 and tier 4 towns and villages in India. And some of these companies can take away some market share from Asian Paints. But having said that, they'll continue to remain a dominant player in the industry. I don't think so there's any doubt about that.
Asian Paints is the question. Pankaj, will you still be a buyer in Asian Paints?
Well, while it's a great company, but we still believe that valuations in the entire paint space, for that matter, are extremely expensive in context of the growth that the sector is going to deliver over the next 3 to 5 years. So we actually have a somewhat negative view on the paint sector as a whole, and that's primarily more because of valuations more than anything else. So we'll stay away from the stock because of expensive valuations.
Okay, Pankaj, always good to chat with you. Thanks for taking the time out. You know, we were just chatting about this entire tech space, and after Swiggy, Ola is the other startup whose valuation has been cut by its PE investor, as the era of easy money clearly seems to be ending and investors are tightening their purse strings. Will this trend sustain? That's the big question. Sharad is here with his analysis. Sharad?
Well, yes, the valuations markdown are happening by the PE investors, and this is not the first markdown. Some big startups are actually having 2 or 3 markdowns coming in. We can see over here, Ola, Swiggy, both of them have got valuation cut by almost 35 to 49% from the previous round. And also Oyo and Byju's, that's a significant cut of almost 73%. But the question remains is why the valuation cut, why the valuation markdown is happening in the PE industries. Of course, the rising interest rates was there where we could see the impact happening. And of course, the cash preservation, that is something which is very important, which actually leads to the focus on the paths to profitability. And also the valuations have become very steep because of your lofty liquidity which was from 10. Now, apart from this, now let's look at how the funding has happened in the Indian ecosystem. And that number, if you see, for the last 4 straight quarters, the funding winter is there. We can easily see it over here. And almost, you could say, only $301 billion was actually raised in the overall funding in the ecosystem. Now, looking ahead, what it actually means for the system. Now, do remember, for the next 6 to 8 odd months, it's expected that there would be a muted funding going ahead. We're expecting more layoffs and more rounds coming in as companies are looking for a path to profitability, and the Ps are urging their portfolio companies to conserve their cash levels and increase their runway going ahead.
That into perspective as well, but the market is losing steam as we speak. We were holding on to 18,300, but that's not being maintained as of now. Kunal, would you call this the expiry move maybe playing out, or what is really happening in the markets?
Yeah, it's exactly the expiry move. So 18,300 call writers, they were at a point where they were having the upper hand throughout the day. Even yesterday in the second half, they managed to protect the 18,300 mark broadly. And today, because it's the weekly expiry, the last half an hour, last 1 hour, we expected the markets to I would not say sell off, but then fall below the 18,000 mark and possibly even close below this level. So it doesn't come as a surprise, this last half an hour of selling. I think now we could be clear towards that 18,300 levels on closing basis, and hoping that tomorrow could be a decent day on the upside for the indices after such a kind of an expiry move.
Okay, so that's the take coming in at the market level. We'll do one thing. We'll quickly slip into a very short break, but don't go anywhere. When we come back, we'll discuss the other market fundamentals as well as what's happening with respect to the expiry related move. Welcome back. Well, for the markets below the 18,300 mark, and in the last few minutes, it's on a particular area which is seeing a lot of pressure. But of course, the Nifty Bank has given up quite a bit of its gain. It was a good 250 points higher. Now it's up only by 110 points. So there's a definite slip happening there as well. Naresh, your take as far as some of these banking names are concerned, and what would be your best buy at this point of time from financials?
So in terms of banks, we are clearly seeing the largest weight, which is HDFC Bank, taking a pause here. If we look at ICICI Bank, it also is closer to the previous highs. So it's taking a little bit of a pause. If you look at the all-time highs for ICICI Bank at 960, we are at 940. So a little bit of a pause in both of them, but ICICI Bank continues to look positive. But the new leadership could be coming in from the rest of the names, which is where Axis Bank and IndusInd Bank look very promising. Both are starting to make 3-4 month highs, as well as the longer term return has not been great for them. They are back, say, IndusInd Bank is still below the pre-COVID prices. Axis Bank is just 5% higher than the pre-COVID prices. So these are the two names which come up on the radar in terms of large cap banking space, which could do really well from here. And ICICI Bank continues to be a leader. We'll start looking at HDFC Bank on dips to 1550 or whenever it crosses 1730. Till that point of time, that could remain range bound. So for now, it is Axis and IndusInd to take leadership and ICICI to continue with the market performance.
Okay, so that's the take coming in as far as financials is concerned. Kunj Bansal also joins us on the show. Kunj, hi, thank you so much for making time speaking with us. A whole host of result reactions today. Not sure where to begin with, because whether it's the pharma space or the cap goods space, even metals, Paytm for that matter, really a lot of talking points. Anything that stood out to you in the trading session today? Any stock that you would want to pick out and speak about?
Yeah, so we are going through a result season. So obviously there are results on a daily basis and number of them. If I were to kind of try to draw out some inferences from the results that have been declared till now, as a starting point, my broader observation will be that the results are slightly lower than the expectation. And when I say this, let's also keep in mind that the expectations in the first place itself were quite subdued. There was an expectation that given the prevalent slowdown in the consumption that we are seeing largely in the rural economy and little bit in the urban economy as well, the top line growth won't be there. So unfortunately, the numbers have been even below that expectation, though marginally. On margin front, it's a mixed picture. So some sectors have shown improvement, taking the advantage of the commodity prices, especially the metal price correction that has been happening, and the high cost inventory having gone away. Some of them have still not been able to do that. Let's say specifically FMCG. So if I have to kind of pick out some opportunities, which is where we can continue to see, we have seen good numbers and we can continue to see. It's one comes from the capital goods space, and second comes from the broader banking space. So these are the two spaces wherein investment opportunities are there for the investors.
Since you're talking about the capital goods space, we expect numbers from Siemens to come later today, and both of these counters, Siemens as well as ABB, have been sitting at all-time high levels. L&T disappointed with their margin performance. Is this something that we should brace for the other players as well?
So yes, as I was saying that the result season has been slightly below expectation on the top line growth, which itself was subdued in terms of expectations. Margin have been a mixed picture. So within capital goods also, if I say the margins of some of the companies that have declared numbers till now have really been good, and some have not been as good. So I guess it's something which will be more company specific and difficult to take a view on an ongoing basis. But yes, the companies have started to take to get the feeling benefit of the corrected metal prices. Some of them are still carrying the high cost inventory, so they haven't been able to report improved margins in this quarter. Probably that will happen in next quarter. Of course, the impact of leverage also comes in. So wherever the sales growth is significantly higher, let's say 20-25% plus, the leverage advantage immediately reflects in improved margins. Wherever the sales growth is lesser in terms of 10-15%, then the leverage advantage is not there.
Right. Okay, that's the take coming in on cap goods right now. Idea has sprung up in trade about 6% higher for this one. Adani Enterprises, by the way, is sitting at the session highs. A solid 5% move is what you're seeing on that stock price. Adani Ports as well in tow, a 3% move coming in there. Asian Paints, of course, has reacted to its commentary as well. The management stated that it will continue to aggressively pursue growth. They're committed to scaling the home decor revenue to about 8 to 10% of the decorative revenue by about FY26. And just looking at the numbers as well, they look pretty much at par with what the market was anticipating. In fact, the margins have actually improved sequentially because of the easing inflation in raw material prices and sourcing efficiencies as well. Asian Paints is the other big winner in trade today. Having said that, there's Gujarat Gas, which continues to look good. SBI Card as well is making a decent move. And then, of course, there's GNFC as well, which is looking smart in trade as we speak right now. The other important number to look out for, I guess, would be tomorrow, Tata Motors, when it's delivering its numbers. We are expecting, segmental-wise performance. JLR volumes should be higher on a sequential basis. India CV volumes may actually post a downtick on a year-on-year basis, but a solid 22% uptick sequentially. And the passenger vehicle volumes should see an uptick on a sequential as well as on a year-on-year basis. Kunj, what's the pecking order now when it comes to autos for you?
So I think pecking order in terms of sub-segments of the sector, if we take, so first of all, there is a reasonable amount of buying interest that has come into the automobile sector. In general, stocks have been seeing buying interest and as a result have been moving up. The monthly volume numbers, auto sector is one sector wherein as market participants, we have an advantage that instead of waiting for the quarter end to know about the expected results of the company, the monthly sales numbers do keep giving a broader picture as to how the results will shape up. What we don't come to know is how the margins will shape up, whether they'll go up or go down. So as I said, auto has been attracting a decent amount of interest, partly led by the monthly numbers that have been coming in, which have been decent. Secondly, the kind of growth guidance that has been given by some of the companies who have already declared their numbers. And the growth guidance is in a single digit, which possibly looks low. But in my view, there is an upside possibility to those single digit growth guidance. The upside possibility comes from the fact that if we have a good monsoon, hopefully we should see rural recovery coming in, which has been not visible for quite some time. With the interest rate pause having been done by RBI, of course, the correction could be far away, but at least the hike won't be there. So that will give a lot of space to consumers to plan their expenditure. And as a result, they could come back in the market to start buying, amongst other things, automobiles, specifically two-wheelers. And thankfully, the global crude prices, despite various developments, news flows, ups and downs, are continuing to remain in a limited range, which is, of course, not cheap for India as an importer, but yes, it has not been going up. So these are all the upside triggers that are there. What is additionally happening is that the auto ancillaries are the ones which have been reporting good numbers. So that is where I think there are a lot of investment opportunities. Investors are already looking at it. Some of them have moved up sharply, some of them valuation wise, because quite a lot of these stocks were not performing for last 2 years. So at the same time, continuing to report growth in those 2 years. So that's where the investment interest is there.
So that's the take on some of the auto names. In fact, building on that point, let's go across to my colleague Shrishti. She's standing by to fill us in with the expectations from a couple of auto companies which are expected to come out with earnings. Aisha later today and Tata Motors tomorrow, right, Shrishti?
Well, yes. Firstly, let's talk about Tata Motors. This time around, there has been a strong set of performance when it comes to the volume growth for their JLR division specifically, which has seen a volume uptick of 9% on a sequential basis. Coming to the India business, that also stood steady, and that will definitely reflect onto the margins as well as the overall numbers of the company. With volume uptick, the operating leverage will kick in. Apart from that, this mix was definitely great, especially for their JLR division, and along with that, the company did manage to take some of the price hikes as well as the cooling of the raw material prices. All of these factors will play in the numbers. So quickly, let's have a look at the expectation on a consolidated basis. Quarter on quarter, we are expecting a jump of 18.5% onto their top line. The EBIT is expected at 12,931 crores, and the margins are expected to improve from 10.9% same quarter last year to 12.4% on a consolidated basis this time around. And the profit is also expected to improve from 3,043 crores. This time the expectation is 4,003 crores. But talking about their segmental performance, so the standalone business or to the margins of the company are expected to improve 110 basis points, taking it higher to 8.8%. And look at the business or the growth in the JLR division, because FY23 has been definitely a turnaround year for JLR, because they started this particular financial year with a negative EBIT margin of 4.4 and taking it higher, and this time the expectation is 6% onto their JLR EBIT margin. So that's a key number to watch out for. But apart from that, a very key highlight this time around will be the dividend, because Tata Motors will be giving out dividends after 2016. So what is the announcement on that front and what are the deleveraging plans? We'll be watching out on that as well.
Okay, thank you, Shrishti, for putting that into perspective. We'll watch out for all of these details coming in for the couple of auto names. But in a surprising turn of events, Mauritius Financial Services Minister Mahin Kumar Siruthan has refuted the claims made in the Hindenburg research report regarding the island nation's shell businesses. This has not only restored the enterprise's confidence but has also resulted in a significant upward surge for Adani Group shares during Thursday morning trading. In the middle of this, and as a follow-up to the investor roadshow, Adani Enterprises announced that the company's board of directors will meet on May 13th to approve the request to raise funding by selling stocks. This comes months after the business pulled its 20,000 crore follow-on public offer in February amid the Hindenburg scandal, which wiped out more than $140 billion of the port-to-power conglomerate's market worth. In fact, listen in to the bite coming in from the minister in charge as well.
I'm informed by the Financial Services Commission that it has taken note of the contents of the report published by Hindenburg Research in January 2023, as well as other information pertaining to this matter, wherein specific reference has been made to inter alia, creation of offshore shell companies in Mauritius, the UAE, and the Caribbean islands. Mr. Speaker, sir, at the outset, I wish to inform the House that the allegations of the presence of shell companies in Mauritius are false and baseless. According to the law, shell companies are not allowed in Mauritius. All global business companies licensed by the Financial Services Commission have to meet substance requirements on an ongoing basis as per Section 21 of the Financial Services Act and are being strictly monitored by the Commission. In fact, in order to meet the substance requirements, all global business companies have to first carry out their core income-generating activities in or from Mauritius as required under the Income Tax Act. Second, be managed and controlled from Mauritius. Third, be administered by a management company. Fourth, have at least 2 directors resident in Mauritius of sufficient caliber to exercise independence of mind and judgment. Fifth, maintain at all times their principal bank account in Mauritius. Sixth, keep and maintain at all times their accounting records at their registered office in Mauritius. 7, prepare their statutory financial statements and cause those financial statements to be audited in Mauritius. And 8, provide for meetings of directors to include at least 2 directors from Mauritius.
Okay, and a big move follows that on the Adani Group stocks right now. Adani Enterprises, of course, holding out 5%, but that's not the only gainer in trade. You've got Adani Ports as well, which is looking very strong. And here I'm only marking out the more liquid ones. The entire group is in focus, and most of these stocks are holding out well. Adani Ports higher by nearly 3% on the futures as we speak right now. Kunal, was clearly behind for Adani Group of names, right? Ports and Enterprises.
Yeah, worst seems to be behind. These stocks are now getting into the stronger trading activity zone, because that's the highlight of determining that whether the worst is actually behind for the stock price in terms of participation from traders or not. Because these stocks, they've recovered quite well. Adani Enterprise from that 1100 mark in the first or end of January, start of the month of February, has done reasonably well. Adani Ports has also recovered quite smartly. ACC and Ambuja apparently are the two stocks which have still not shown signs of a very strong pickup of momentum, even though these chart patterns time and again show signs of a smaller or short-term breakout. So I believe, yeah, I think these stocks have started to get into good trading activity. Hopefully, these stocks, when they confirm a breakout for themselves, maybe a retracement of 50%, 61.8% retracement from that Jan highs, for these individual stocks, we can expect maybe the worst to be significantly behind for these stocks and trading activity to resume or come at par to maybe the end of 2022.
Duresh, wanted your take regarding a couple of these counters which are in news. Indian Hotels, there's an analyst meet later today, so that will be in focus. That stock was doing quite well for itself earlier. And the other one I want to talk about is, of course, Kotak Mahindra Bank and HAL. These are both the candidates which are likely to see heavy inflows on account of MSCI inclusion, which is likely to be announced later tonight.
So starting with Indian Hotels, the stock gave a breakout about that 330 to 340 mark. Has moved up all the way to 375. A dip back to 350, 55 would still be a normal correction. So for now, after a rally, it looks like a pause in the making. So would wait it out, wait for a dip more to actually initiate a fresh trade. Overall, the medium-term outlook still remains positive. Kotak Mahindra Bank is a tough one because the stock has not been able to cross this level of 1950 to 2000 for the last 1 year. And if it can sustain that 2000 mark, that would be a big positive signal. So for now, watching for it. HL continues to be in a strong trend, and going forward, sustaining about 3000, it opens up a move to 3200, 3300. The longer term trend is still positive. It's just that over the last few weeks, the stock has gone a little sideways. It's been a slow and steady rally. So for now, positive on it, would expect some bit of a move towards 3200 also.
Okay, so those are the stocks which are going to be in focus on account of the MSCI inflow, as well as Indian Hotels, wherein there's an analyst meet and we are expecting major announcements to come through from there as well. Kunj, what's your take on the entire tire stocks after the results from a couple of them like SEAT, even Apollo Tyres and MRF? We have seen a big surge in these counters. Do they still, fall in the buy list after the run-up as well?
So we were talking of auto ancillaries earlier, and I did mention that in addition to auto stocks, auto OEMs, auto ancillaries are the one which have finally started to attract market interest, some buying interest. As a result, share prices moving up, and obviously when share price moves up, the valuation also moves up after the almost 2 years of non-participation. Tires obviously fall largely into the auto ancillary itself. But as a very specific event that has happened for the tire sector is that the margins have been significantly higher. So while the volume growth for the whole sector continues to be in that mid to high mid single digit kind of growth, but the margins have significantly improved. And this margin improvement is after at least 3 or 4 quarters of either subdued margin or margins continuously going down, largely led by the raw material, that is the rubber price. So that is something that has happened. Now that's a phenomena that's cyclical. There are periods when rubber prices are favorable, so the margins show improvement, and there are periods which are not exactly that way, and the reverse happens. And stocks obviously attract buying attention when they give good numbers based on the corrected valuation, corrected prices, and the same has happened in the tire stocks. I think given the way the numbers could likely be better even for next quarter and the quarter after that, we could continue to see buying interest remaining there for some time, mainly as I said, backed by the improved financial numbers that are expected.
Just looking at what's still under pressure, and DRL is now down almost 7% on the futures. The LNT as well hasn't seen any recovery come by, 5.25% lower there. Hindalco, Divi's Labs, JSW Steel, even ITC is down about 1% as we speak right now. Eicher Motors, Bharti, Apollo Hospitals, Tata Consumer, Infosys, these are all seeing some weak moves. But time to get in some BTST trades as well going. Kunal, on your list?
So the stock which I would suggest for a BTST play would be two buy calls. DLF as a first stock suggesting a buy, trading at 430 approximately, would suggest a buy with targets of 450, stop loss at 420, and HUL has been a breakout candidate from the entire FMCG pack today. That's a buy, 2650 as a target, stop loss at 2540.
Naresh, what about your BTST ideas?
So that would be a buy on Axis Bank, very close to that takeout about 900 mark, stop loss at 890 and a target price of 920. Second would be a buy on Gujarat Gas, which has held on to the gap up move today. And we've seen the whole gas sector do well. So this could be the next one which could see more momentum. Stop loss at 482 and a target price of 505.
Okay, so those are the top recommendations coming as a BTSC trade. But let's also spot some of the stocks which are buzzing on heavy price volume action as well. Sanofi India has seen a breakout from an upward sloping resistance, has hit a 8-month high, surpassed the 200-day moving average today, sitting at the highest point of the trading session, 9% gain. Quest Corp is another one which has seen a breakout from over a month of consolidation, surpassed the 100-day moving average in the volume 2 at almost 16 times the 10-day average that we have seen. And Bikaji, a breakout from 10-session consolidation and volume at 4 times 10-day average. So a lot of these counters buzzing around. Kunal, Sanofi, Quest Corp, Bikaji, anything that makes it to your buy list?
Well, don't track these stocks mostly, but then charts for Sanofi is a bit more better as well as in terms of a breakout, because today the stock has given two different types of a breakout, a price volume breakout, a breakout of its 200-day moving average, as well as the third and the most important pattern is a gap which was created for Sanofi almost a month back, and the gap was around 6,000 to 5,600, 650 for the stock. So that gap has also been closed, which means major part of the bearishness is now behind us, and possibly the previous lows of 5,500 approximately would act as a major support for Sanofi. So this looks like a more of a trend-changing stock out of the list of stocks we mentioned.
Also wanted to highlight some of the cues that you need to have on your radar for tomorrow. Bank of England rate decision is going to be out. It's going to be the 12th time that Bank of England will be raising rates. So watch out for that one. And then back home, of course, tomorrow we'll get the Indian inflation data as well. So India CPI is something that we'll track for tomorrow. We'll get numbers from Cipla and Tata Motors as we talked about, but from the broader markets, names like Indraprastha Gas, Vedanta, Manappuram Finance, Sapphire Foods, Hindustan Aeronautics, these will be the counters which will be in focus. Corporate action, wherein Tata Motors is likely to consider first dividend in over 6 years, as Shrishti also pointed out earlier. And then, of course, Indian Overseas Bank is also likely to discuss some capital raising plan, and Team Lee's wherein the buyback issue will open. So watch out for some of these counters. Separately, the Adani Hindenburg row will get heard in the Supreme Court. So that is another important issue to really track. And then Prime Minister Modi is likely to launch some of the projects in Gujarat worth around 4,400 crores. So that is something as well that we are tracking at this point of time. But coming back to the markets, Naresh, your sense as to what the market positioning should be at this point of time, and what could be the move that we should see on the markets come tomorrow?
Seems like a little bit of a pressure from the heavyweights post numbers, but the broader market has not seen a similar correction. So if you look at the mid cap and the small cap indices, they are up in the positive all through the day, right from morning. So the stance continues to remain positive on the indices. So for now, 18,100 to 200 is the near-term support. Upside could be 18,600 to 18,800 on the Nifty. Bank Nifty has a lot of resistance around that 44,000 mark, which was the previous high. So for now, that is where we could stay in a range of 43,000 to 44,000. So for the near term, it's time to be more stock specific for the next few sessions. Hold on the Nifty. On Bank Nifty, would wait out for some more time.
Winding up